Hey guys, good afternoon. Sound check, please. Hey, Jason, Chase. Um, Sound check, please. Let me know if you can hear me. Hey, GB. Jason, let's start with Chase's question since it's a quick one. You can ask me, Chase. You can ask me on a daily basis, and I can either show you my P&L. Hopefully, it's not a bad day to show you, or I can just tell you what I did. But yeah, you can ask me. I don't have a problem. Okay, and I'll show you, I mean, my P&L whenever you ask. Jason, this is what this is all about, so I don't mind you asking really long questions in the coaching. I mean, that's what this is all about. I just want to make sure you're around. Can you hear me, Jason? Are you around? Okay, great. So yeah, feel free, no problem at all. So first question is, can you go over patterns you look for at the open? And do I play buy setup, sell setup off the 1 minute on a trending stock, or do I prefer to use the 2 minute for trend confirmation or for trend continuation off the gap? I don't know what that means, like trend continuation off the gap, but I mean, I think I do. Okay, let me answer the first question first. Okay, and then we'll go to the second question. The first question talks about. Let me actually open up in new, I mean, kind of just a surface that I can draw on. Oops. Here you go. You see the top, right? Okay, well, that's okay. So what patterns do I play? First pattern is 1 minute high low. If I'm looking short, I'd want to see a green bar. So, a small green bar, and then the negation of the green bar. So if the stock were to break under it, short, okay? Or a doji bar, like so, and then short. Or maybe a small red bar, or I don't like a big green bar that gets negated, but if you have a big green bar that gets negated, it's actually a pretty good confirmation that we are lower. It's just that I don't like to short after a big drop because the big green bar is going to close at the top. So if the stock were to drop from the top all the way down to the entry, that's kind of a big stop. That's the only thing I don't like about it. But I want to see either a green bar or a battle bar, some kind of a fight, right? Such as a narrow range bar or a narrow body bar. What I don't want to do is short after a big red bar and then short. Usually that is not a good entry. Why is that? Does anybody know why? So again, as far as the first entry is the high-low entry. I look for a small green bar and then play under it short. Small green bar, under it short, or a narrow range bar like so. Narrow body is okay too, even if it's big. And then under it, again, short under it. Right here short, right here short, right here short. Okay? So if the stock were to take out the low, I'm in it short, in it short. But I don't short after a red bar like this, big red bar, and then, and then short under it. I don't do that. Why is that? Anybody know why? William, how are you? The bulls haven't shown you anything yet. Yeah, I mean, I just, maybe that's the initial drop and that's it. Maybe it's not gonna drop anymore. Maybe that's all you're gonna see. And you get in it and then bam, and it's sort of chasing, right? And So I want to see what the bulls have in store, so to speak. I want them to show me their teeth, or I want to see a battle. Those are, those are battles. So I have a clear winner, so to speak, right? What if after a big red bar, the stock, bottoms, and then you get in it here short, and then shortly after getting in it, bounces. So it's all about getting information, and the red bar doesn't show me. It shows me it gives me one side of the coin, but it doesn't show me both sides. It doesn't show me, or it doesn't show me both competitors or both teams. It shows me one team, and it might be a really, really good team. It might be Duke or Kentucky in basketball, but it didn't tell me that they were going to play against the Warriors, or you know what I mean? So if had I known Duke basketball was going to be playing the Warriors, of course I would have said no, bet on the Warriors. But you don't know, you don't see both sides if you short on the red bar. I'm not saying it doesn't work, it does, and oftentimes I miss out by not shorting on the big red bar. But the other half of the time, it also, you know, goes right back up and would have you take a loss. So I try to be precise with my entries, with my if I get in here and I don't have enough information, I'm gonna feel jittery. Meaning, as soon as I see a green bar, I'm gonna think, oh, it's gonna go back up, and I just got sucked in it. Whereas if I see, let me just show you. If I were to see a green bar right here, let's say the stock drops a little bit first, drops, right? And if I were to see a green bar here, up, I would say no problem, because I have enough confidence in what I've seen what I saw there. Does that make sense? So I would expect it to continue lower. Oops, I didn't mean to draw another circle. I'd expect the stock to give me a sell setup and continue lower, like so. Okay. Whereas if I got a red bar and then another red bar, and then I start to see some green, then I don't know. Is it going to go all the way back up and stop out, as they often do, or is it just going to be a temporary move up and then a continuation lower? So the high low is the first entry. Now the first your question, your follow-up question should be, what time frame? Well, the smallest time frame is the 1 minute. So you can actually, if you like something at the open and you feel very comfortable about getting in it right at the open, then off the 1 minute. If you don't, you can wait for the 2 minute bar to finish forming. But good gaps usually don't wait around. So if I like an entry, if I see an entry on the 1 minute and I like it, then I often just go for it off the 1 minute chart. Okay. The more price action, the better. So as long as it doesn't take out the lows just yet. If it's a long red bar before you, what's that? Yeah, right. I think I understand what you're saying. The more price action, the better. Not necessarily, but the more information you have, the better. Sometimes more price action doesn't really give you enough information. For example, something like this at the open. Um, um, 1 second, please. Okay. For example, you get a red bar and then it's followed on by another green bar, a red bar, green bar, red bar, green bar. You don't know if it's going higher or lower. So more price action in this case wouldn't necessarily be better. Okay, so that's the first entry, the high, I call it the high-low entry. the high-low entry. If I'm going long, the opposite is true. I look to play long over red bar, long over a doji bar, long over, what if I have a tail? If I have a tail, that's good. If I have a topping tail or a bottoming tail, but if I have a topping tail, right, that's bearish if I have a topping tail. And then you get a stock that takes out the topping tail, as long as the bar is not too big, right? You get a stock that takes out the topping tail, then great. So anything like this would be good for me. If I see a big green bar, then I can't do it. That takes me to my second entry, which is if I see a big green bar, then I have to wait for a 1, 2, 3 or a 1, 2, 3, 4 or even a breakout or a pullback. So the second entry would be a 1, 2, 3. So if you get a narrow range bar right here, then you have, and then the stock continues higher, then you have a 1, 2, 3. Okay, if you have multiple doji bars right here, then it's a 1, 2, 3, 4, 1, 2, 3, 4, 5. Doesn't matter. It becomes more of a breakout basically, and that is my second entry, the 1, 2, 3, 1, 2, 3, 4. Again, you can, if the 1 minute looks good and you like the gap, then absolutely go for it. If you're not sure about the 1 minute, then look at it on the 2. Does it look good on the 2? If you don't have enough information yet and you're not sure about the 1 minute, then wait. Then pass on it and wait for the 2 minute to give you an entry, or wait for another entry on the 1 minute. So there's no specific rules. I've seen brilliant minds in the past. I mean, I've worked with one guy in particular that was really, really smart and very scholarly, but couldn't trade because he wanted, specific rules, 1 minute or 2 minute, or it's just how it looks and feels to you. If it feels good, looks good, the right gap, the right market environment, and is it okay to do, and is it okay to do it off the one? Sure. Is it okay to say no to the 1 minute, even though it's a really good tier 1 gap, but because you don't feel comfortable yet? Good, that's fine too. Ultimately, and this is why trading is very personal, is if you don't feel comfortable with the trade, there is no right or wrong, okay? Just keep that in mind. There is absolutely no right or wrong. There's a million ways to make money. You just need to find your way. And if you don't feel comfortable with whatever it is that you're doing, you're never going to make money, ever, unfortunately. I mean, you'll make money on some trades, but in the long run, you won't. So you have to find a way that you feel comfortable with, okay, or you feel good about, because then you would be able to stick with the trades, manage them correctly, kill them quickly when that needs to be done. So that's the most important thing, is finding a way that you really love and agree with, that makes perfect sense to you. So again, the first entry would be the high low. Um, that's the high low entry. High low meaning above the high, 1 minute bar. And then the second entry would be the 1, 2, 3, or in this case the 1, 2, 3, 4. Doesn't matter. It's the same. And then the third entry would be the breakout. If you get a multiple bars, not just one, then you get the breakout. So that's the, I have one little problem with this annotation tool. It's a great, love it. I struggle to really find a good annotation tool. I like this one a lot, but it starts to get very clunky. It gets stuck if I draw too much. So right now it's about the most I can draw. So I have to erase it, is what I'm saying. So the high low, the 1, 2, 3, and then number 3 would be the breakdown, especially if there's a shakeout on it, that's even better. And then number 4 is the pullback. Now the pullback, yes, you have to be careful about it, because if a stock, because there's two types of pullback entries. There's the one where the stock gaps up to here, gaps up here, okay, and then immediately pulls back, and then gives you a buy setup, like so, right? That is called a buy setup. And then there's the PBS, or the uptrending buy setup, where the stock initially goes higher and then pulls back. Does that make sense? Those two are acceptable. Those two are acceptable, especially if they form at the rising 20, maybe at some support, like a gap fill is my favorite. Best support you can get is the gap fill support. Look at where the market bottomed today, probably at the gap fill. So the gap fill is the minor support, and that's the best support area. And especially if it coincides with the 20. And then there is another buy setup whereby the stock initially goes higher, like so, right? But then here's what it does. And then pulls back, and then gives you a buy setup. Let's just say, oh, I can't, it's not letting me draw here. Okay, here's the buy setup. You get a buy setup here, but what is there a problem with it? You guys think there is a problem with it? Is there? So that is the downtrend. If it takes out, if the first bar is a green bar, if the stock initially moves up and then pulls back below the low of that initial move, then you can't do it on the first entry. You can still look to do it, but you have to do it on the second entry. So again, let's assume it went higher initially, maybe a couple green bars, and then it pulled back, and you're stalking it long, thinking, I'd like to play it long, pull back, and here it is, looking nice, but the bulls showed up, as you can see, and they didn't, and the bears actually, when it got sold, they completely reversed they completely demolished what the bulls built. That's not a good sign. So this one I don't do on the first entry. I let it go. And if it doesn't usually go right back up, it rarely does. But let's say, went up a little bit. What it usually does is, if it's going to work at all, is it gives you a red bar here. And then now you have a setup. Now you can play it long above the red bar is high, because now you say, well, it's off the moving average and I have a retest. So the bears showed up again, tried to take it lower and failed. Now you can do it. Long over that red bar is high, stop under the pivot. Does that make sense? So that's a buy setup with confirmation, or we call it a retest. A retest of what? A retest of the support, but really what it means is the bulls were retested or tested, and they succeeded by taking out the red bars high. Okay, so that's a buy setup to pay attention to. Which one of the two? Well, we know the third one. The downtrending buy setup is not to be taken on the first entry, but which one of the two do you think I like the most? The pullback inside of the initial green, or the pullback right off the open and then long, at support? Which one do I like, A or B? Which one do I like? What more? Anybody? That's the pullback, and that's just a pullback right off the open. A or B? A, number one, got it. Okay. Yes, with one exception. Does anybody know what it is? You're absolutely right, but what's the exception? Now, we're not talking about quality here. I'm not talking about, oh, it can't pull back uh, too much. Yes, it can't pull back too much for sure. The fill, I don't know what that means. The gap fill. Yeah. If they, actually, if this forms at the gap fill, the first one is not going to be at the gap fill because the first one moved up initially. So it's just never going to be at the gap fill. If B is at the gap fill, then I would say I would go with B. I mean, I really, really like playing long at the gap fill. It's the strongest support area you can have, and it's just usually too much. I mean, there's too much support there for the stock to continue lower. So I really like B at the gap fill. That's my favorite area to play long, at the gap fill. All right. A, I like more because I know the stock is in an uptrend, or at least I know that the bulls are won the battle. But the one thing you have to pay attention to is gaps create hysteria or mania or panic amongst traders. And so sometimes what happens is, unfortunately, what happens is the stock makes the move, the move for what it was supposed to make the entire day. It makes it in the first 5 minutes, and basically it's done. So you get the pullback, and you think, okay, back up, right? And no, it's made the move for the day. Just gets sloppy, and then basically you stop out right here. The buy setup fails. So you don't want it to have rallied way too much already. Now, how much is too much? It's all relative. You look at the stock and you have to judge based on how much the stock moves usually, how extended it is on the daily chart, how good of a gap it is, how big of a move on the intraday charts. But that's the biggest issue is sometimes when it moves up a lot and you get the pullback, you don't want to play it on the first buy setup. You want basically some confirmation or wait for a later buy setup at 10 o'clock, 10:30, but not the initial pullback. Does that make sense? So that is that's something that happens a lot, that the gap basically makes the move, makes basically gets to target, so to speak, in the first 5 minutes. And so the next buy setup becomes not playable. And it's not an easy call because sometimes stocks are gapping to all-time highs. So it's not like it on this run up, it reached target on the daily chart. It may not have, right? So it's sometimes you have to kind of get a feel for it. Okay, so that's that. So those are the primary entries for me at the open, is what I went over. As you can see, it's all the same. Stocks can give you can, stocks can correct through time by going sideways, in which case you can play a breakout, or they can correct through price by pulling back, right? So it's one or the other. It's always either a pullback or a breakout, or the third way is through a climactic. At the open, usually that's not applicable. You don't get a climactic entry at the open. Sometimes you get a flurry down, meaning stock gaps up and it flurries down quickly into, on the 1 minute chart, into the gap fill, into support, the first 5 minutes, like so. Notice how the bars are getting bigger and bigger, right? Then yeah, you can do that, but that's tough. But usually the climactic buy setup that is not for gap trading at the open. All right. And again, you can always, if you're not sure about a buy setup or about an entry, there are two things you can do. you can wait for a secondary entry on that same time frame. Let's say this was the buy setup, wasn't sure about it, and then you waited for maybe a red bar right here, and then you go, or maybe a couple of them, and then the stock proceeded to continue higher after the red bar, right? You can either wait for a secondary entry on this time frame or wait for the buy setup maybe to trigger to kick in on the larger time frame. In both scenarios, it's you're basically being cautious and less aggressive by either waiting for a secondary entry on that same time frame or by waiting for the larger time frame to trigger the pattern, because this will usually be a buy setup on the 1 and the 2, but the 1 minute will trigger first. If you let it go and wait for the 2 to finish forming and it triggers also on the 2 minute, then now you have a larger time frame that's also triggering, so it's more confirmation. All right, so you can get more. What I'm trying to say is you can get more confirmation by either waiting for a larger time frame or to trigger, or by waiting for a secondary entry on that same time frame. Those are the two things that you can do. All right. Okay. So that's a good question. That was a good question, Jason. The second question, I think, was, let me scroll up a little bit. I know you use the 15-minute charts for pattern recognition after lunch, with 5-minute charts being used to get a little more insight. But do you ever look at the 2-minute to make sure that's also in alignment, or do you only reserve the 1 and the 2 for the open and for plymos? No, I do look at the 2-minute, even for a 15-minute sell setup or breakdown in the afternoon. I do look. Your job is to make sure the picture is right. So you're studying something. You're studying maybe the surface of the moon from this side, but it's nice to also know what's on the other side, what's on this side, the you know north, south, east, whatever, right? It's nice to know what the stock looks, how the stock looks from every angle. But the most relevant time frame or time frames are usually the ones that are surrounding the setup time frame. So if it's a 15-minute buy setup or sell setup, the closest time frame that we use would be the 5-minute time frame. Okay, not the 2-minute. So you don't want to go, you don't want to you don't want to you don't want it to be an overkill. For example, if I'm doing a daily chart, I don't want to be looking at the 5-minute chart. That would be an overkill, totally. The daily and looking at all, zooming down all the way down to the 5-minute charts, the 5-minute chart. That would be not a good thing. But can you go from the 15 to the 2? Sure, you can. But just keep in mind that the most important time frames are the ones surrounding the setup. So one smaller, one larger. In terms of the 15-minute, the next larger time frame would be the hourly, and that's really too large. And I don't mind using the 30-minute. I think it's a wonderful time frame to use. The problem with using the 30-minute is now you have the 1, the 2, the 5, the 15, the 30, the 60, the daily, the weekly. You have too many time frames. Otherwise, I think the 30-minute is a good time frame to use. It breaks it down nicely. It's between the 15 and the hourly. It's a nice break between the hourly and the 15, because there's that 45-minute window between the two that's not covered by any time frame. So I do like the 30-minute, but I tried to use it and then I just said no, because I didn't really use it for that long, for like just a couple days, and I went back. Usually before you know for sure, you want to use it for at least a week or so, but I just found it too much. I thought I have too many time frames now to consider. and you end up talking yourself out of the trade a lot. Okay, a lot of the time. Trading, unfortunately, guys, I'm an accountant. I mean, I like my favorite my favorite object in the world is a box. Not kidding. I'm kidding, but as an accountant, I like things to fit nice and neat in boxes. Everything to be to be square and to make perfect sense. Right? But in trading is not exactly like this. I often get a feel. Sometimes I don't even have the time to mention it. Like today, PCG. At the end of the day, I didn't even have the time to mention. Now it did give us a clue that it was gonna pop because we got the, if you look at the 15-minute chart here, we got the shakeout. But I just had a feel, and it got the volume, the shakeout on big volume. But I just before it popped, I had a feel it was gonna pop, and I mean I kid you not even 2 seconds later it popped. So, and I know I'm not the only person that feels this way. That often you get a feel this is about to go, right? You can sense it. Whether the setup looks good or not is it, I mean, it's a different story. Am I right, guys? Do you agree with me that sometimes it's you sense it before it happens, even if the setup, I mean, this is not a good setup. This wasn't, right? We all do. And so what I'm trying to say is, and I've been doing this full time for 11 years, right? And you know what I've been able to do and whatever. What I'm trying to say is, unfortunately, trading, you can't all fit in a box. You have to also use your instinct or your gut feel for to some extent. It's like in sports, right? You can have the perfect plan, but once you're on the court or on the field, you can't be thinking too much. If you're thinking too much, forget it. If you're thinking about the setup or the play the coach drew for the team, or then you're gonna be lost. Am I right? You have to operate from the now. You have to be in the zone. You have to just act. And if you are in the zone, here's the good part. If you do act and allow yourself to make mistakes and be in the zone, most of the time it will be the correct action, the correct course of action. It'll be the right thing most of the time. But if you think about it, overthink it, and you overanalyze it, analysis paralysis, right? Overanalysis leads to paralysis. You get lost. And the same in trading. Do all the prep work that you can, but when you're in the arena, you can't be thinking. You have to be operating. You cannot be thinking too much. You can think a little bit, but you can't be overanalyzing. All right. Uh, yes, I call it grokking, right? Yes, yes. Okay, very good, very good. Any other questions? Grokking something is, again, getting it with your whole being. Is like knowing it on every level. You just know it. You just, you just know it. Even if you can't explain it, you know it on every level. Psychological, uh, technical, emotional, visceral. That's when I say you grokked it. You grok something. Um, and I gave a good example. I one time came up with a good example. It's like biting into an orange versus being somebody describing to you what an orange tastes like. I mean, get the world's best description what an orange tastes like versus actually biting into the orange. A world of a difference. Huge difference. You could be the world expert on honey and not really know what it tastes like. So you will never know what it tastes like until you actually taste it, even if you have the world's best description of what it tastes like, right? Anyways, um, so okay, so those are good. Those were good questions. I find this environment. I hate to be negative, but I can. I mean, I almost can't take more of this environment. Of course, maybe because I also have to get on the mic and talk the talk and look for plays, even though I don't feel like it. Maybe that it makes it harder for me. But I just find it really, really hard to to want to trade. I mean, other than the first, maybe the open, because after the open, what happens is, and I'm not saying you don't get, we don't get momentum. Like look at the VT, but you don't know in advance which one is going to follow through, right? I mean, VT. Let's just, and I saw this. Could I have predicted that this was going to be the one that follows through and the Cree, as much as I liked it, not follow through? Look what the Cree did. I never played the Cree, but I just want to show you what it did, right? It did this would have, yes, look, this is a 15-minute chart, so I really should go to the smaller time frame. So it triggered long. Oops. Let's go. Let's use the blue. It triggered long. Then would have stopped. Then it triggered again as a breakout. Then it maybe stopped, pulled back too deep, and then it went higher. And this is the kind of environment that we have. It's very, very tough. And I know in hindsight it's easy. Oh, here, just get in here, get out there, get back in here, get out there. But that's not how I would have played it. And not just the Cree. What about the PCG? You know, didn't. Yes, there were a couple times when it did produce multiple bars, red bars, or maybe at the open, green bars in a row. But most of the time, I'm just finding it very, very hard to trust, to trade with conviction, because I just don't know what. How about gold? I mean, I was in the gold for what felt like 3 hours. I was in the gold for a long time, triggered, then almost stopped out. I probably would have killed it, but I was on the phone. So I didn't even notice when it popped hard. And so I came back and I had my stop in the system, didn't stop. And then it came back down. I added a little bit and then it went right back up. Right? I mean, look at this pattern. I mean, show me a pattern that looks better than this. I mean, that's perfect. And then no follow through. And then it followed through here. And then it didn't follow through. Now gold is trades weird, not just the ticker symbol gold. I mean gold stocks in general. I don't like to trade them because they don't go with the market. They often go against the market. Um, but it just goes to show you how difficult this environment is, and it's not just that it's so difficult. It's just that I don't have confidence. How about the THFF? One of the few symbols that did follow through. I couldn't get out. I could not get out. I got back. I mean, I got out, but I barely made any money because when it got to 38, it had 16-cent spread. The offer never dropped below 38.16. So I couldn't. So I ended up not making much money on it, even though I did get a little bit of follow through. So it's that kind of environment that makes me not really. I mean, just not too interested um, in trading right now. Um, when you type something looks lower or higher or has setup, does that mean it's it's same as idea, or does that communicate that you will do it yourself, or perhaps this means the probability is worse than an idea or post a trade? Yes, it means it's. I mean, when I type in an idea, it's almost as good as a real trade. Almost. Sometimes it's better. So when I type it in as with the numbers, when I just say something looks higher or lower, uh, it's usually worse than an idea or a trade, a posted trade. It's just like a mention, so to speak. So a mention, an idea, and a posted trade. Those are the three levels, I would say. Sometimes I do type just a symbol, or type, I say this looks higher, because I don't have the time to check and see what the, I can tell I didn't, let's say I didn't see it early enough, and I don't have the time to go check where the stop goes, where the entry goes, and type them in, because then I'll miss it, and everybody else will also miss it. So sometimes I might just type a symbol in, or type or say verbally, this looks higher, because I don't have the time to check, but I do might play it. Most of the time, I do have enough time to check what the entry and the stop, and and if I think it's good enough to put in as an idea or as a posted trade, then I will do it. But most of the time, it's just a mention, right? Okay. I can see you take most posted trades yourself. Do you take many of the ideas? The posted trades, honestly, the intention is to always take it. It's not a posted trade unless I'm planning to take it. Sometimes I don't, though, because I didn't get filled, I got skipped, or right when I posted it, triggered, and whatever, I got skipped. Or last week, there was a day when I didn't take two posted trades in one day. I mean, I was baffled. And in both cases, the first one, I just didn't see it triggering. And when it triggered, I didn't like it after that, because the spread opened up to 7 cents. So I didn't want to do that anymore. I didn't want to trade it anymore after it had already triggered. And then the second one, I was on the phone. I was off the mic and then on the phone, and so I got distracted. But 95% of the time, 99% of the time, I am taking the posted trades. I wouldn't post them if I wasn't going to take them. All right. So that's that. The ideas, I don't know. Probably, some of the ideas I might do as a scalp or something like this, but most of the time it's an idea because I'm not taking it. If I was taking it and I felt it was okay for the whole room, then it would be a posted trade, wouldn't be an idea. Okay. Sometimes I also put it out as an idea because I like the setup a lot, but I just don't like the market environment. Right now, I just don't like the market environment more than the setups. Some of the setups are okay, but just very tough to get follow through, and you don't know which ones are going to follow through and which ones are not. So it shakes your confidence, and if you don't have a lot of confidence about the plays, you're not going to be able to play them right. You're not going to be able to manage it correctly. So, and you're not going to be able to know what to expect, and like what kind of a move, how much of a move. So, all right. Let's see what else. Any other questions? Okay, good stuff. Wasn't sure. Tell you the truth, I thought today was slow. There wasn't much to talk about, but with your questions, I think we discussed some good topics. I scanned also after the close for some swings. Didn't spend much time, just 30 minutes. So here is some of the things that I'm looking at. Swing for tomorrow. The CEE is downtrending, obviously, and it's not really climactic. I mean, it is on the larger time frames. Interesting as a long over 130 with a stop under, I would say 103. Let me just check. Yeah, 130 by the correct stop is under this bottoming tail, 95, but I'm not going to use the bottoming tail. So by 106 or so. So I'm going to put this on the favorites, CEI. The next one is CRMD, is a 123 entry, or 1234. Basing at the highs here should pop, but flat 20, so I'm not going to do it. DBD appears to be ending the downtrend. DBD, look at that volume spike. That was the bottom. The hourly is already in an uptrend, but it's tough. I don't like it that much. EQT, maybe a breakout. Flattish 20, not really. But Don't like that much. KDP is a beautiful weekly buy setup. The daily is tough. And it doesn't have a good setup. Not sure. I'm gonna put it on the favorites, but I don't think this has a good entry. KDP, LJPC. LJPC could go either way. I can see it getting bought, but it also stayed at the lows today. So I can also see it being a short. So LJPC could go either way. MNTA, a very, very nice hourly breakout, maybe on the MNTA. The daily, though, I don't have a lot of confidence in. It does have a shakeout here, breakdown to new lows, and it didn't get any follow through. So the entry for this would be over 1145. The stop tightest would be 1060. That would be the tightest. Tightest stop MMTA. Let's see. Next one is the TRVG. TRVG is a weekly buy setup. Interesting, but doesn't have a good pattern on the daily chart or a good entry. So over maybe the top and tail. It's tough, but a nice weekly chart for sure. I'm going to put it on the favorites too and think about the entry and the stop. The Twilo is, I mean, look at the Twilo, guys. Chinese at all-time highs. I mean, this stock is going higher for sure. Big stop. Even if we were to size it to just today's low, that's $8. Amazing, over $8. WATT breakout on the hourly. It's already triggered though. Some of the shorts. Let's take a look. AVA looks lower, but I don't see a good setup on it. AXGN looks lower. Look at the AXGN. It was up for how long? I mean, look at this. Unbelievable. Once it topped out, red. From $57 to 15 in just 7 months, maybe. Amazing, isn't it? Once they top out, that's it. Game over. Gotta get out. And did the company really change that much overnight? No, it's just ran out of demand, ran out of buying. It looks slower, but doesn't have a good setup. HCLP is kind of a breakdown under the bottoming tail. Don't like it enough. LJPC, as I said, could go either way. That's why it's on both watch lists. LW is a 1, 2, 3. This one is kind of interesting. I don't have any shorts at the moment, and I have 3 longs. And the market is up 3 or 4 bars in a row, so it's would be nice to hedge a little bit by having a short. 1, 2, 3. Hourly doesn't say it's ready yet. Put it on the favorites, but I don't think I'll be. I know I will not be playing it. This is not bad. NDAC, Nasdaq short right here. Stop above the high. That's not bad. I may do it. NDAQ, SEM, 1, 2, 3 after a pretty powerful gap down. Short would be right here. Stop up here. That's not bad. Issue is it would have to drop 50 cents at least to the entry, so it's a little bit far away from it. So I'll put it on the favorites, but I will not put an entry in the system. I'll just watch it. WDR is the toughest one, the toughest, biggest question mark whether to do it or not. Clearly looks beautiful, but I'd have to use this as a stop, and I always want to use the pivot high, the highest high. But if I use the highest high, it'd be too big of a stop. Entry right here, maybe stop right there. That's aggressive. Target 1 maybe, 1 to 1 at the most, and then target 2. So WDR goes to the favorites, but I have to think about it because I'm going to be cheating the stop, not using the right stop. WU, very sloppy on the daily. Hourly appears to be maybe possibly rolling over if it breaks 1685, stop over 1725, but I'm not going to do it. I have 4 longs, 4 shorts to look at and consider whether I want to play them long. I mean, put orders out in the system for these plays or not. Let me just copy the list here and post it for the strategic swing traders. Let's see. Okay. And we said the favorite longs are CEI, KDP, MNTA, and TRVG. The favorite shorts are LW, NDAC, SEM, and WDR. Okay. Favorite longs. Okay. All right. Questions. Christian, how are you? When the market is trending and setups are triggering on higher time frames, do you increase swing trading part and reduce the intraday trading? Or one is irrelevant? One is irrelevant to the other. Okay. One is, as you said, is irrelevant to the other. Day trading, the market could be trending and day trading could be wonderful, or the market could be trending and day trading could be awful. So in both cases, it would be nice for swing trading. The last few days, it's been really nice for swing trading, um, and but not very good for day trading. If this was if we've had this kind of a move in during the during earnings season in a couple of weeks, it would still be good for day trading and swing trading. So they're independent. Jason, can you share a screenshot of how you share size your R unit each time I take a trade? I have to do the math. Okay. Let's see. Let me see if I can find it. Well, I know where it is. I print it and I tape it to my monitor, but I'm gonna give you a screenshot of it. Okay. Now, where is it? I'm gonna go to P3. I'm gonna go to seminars. I'm gonna go to the mentorship. I'm gonna go to West Coast. I'm gonna go to one second. So here is my the one that I use looks like this. Oh no, this is this. Yeah, that's the one that I use. That's the one that I use. It looks a little different. Oh, this is $1,000 risk unit. Let's say 500. Now, also the one that I use is what do you call it? Oh yeah, this does too. Rounds to the nearest 100, to the nearest even number. So that's it. Okay. Now the one I have printed, I don't have this and I don't have the headings because I already know that this is the stock and this is the share size, and these are pennies, right? They're not dollars. So anything 5 or less cents, 10,000 shares. Now I'm not gonna take 10,000 shares on a stock that doesn't have the volume or is really spready or jumpy. That would be a cause for, I mean, that would be a disaster waiting to happen. That's the sort of share size that I use when I'm scalping mostly. 10,000, 15, 20. Okay. And notice initially it's penny by penny. So 5, 6, 7, 8, because it makes a difference between 5 and 10 and 5, between 5 and 8, we go from 10,000 to 600 to 6,000, 6,200. But between, let's say, 90 cents and 100 cents or $1, it's still the same share size. So it doesn't really make a difference. You can combine them together, in fact. Okay. So, um, so here, 18, 20 cents, 22, and then it jumps to 28. I could have used maybe 22 to 25, and 25 to 33, and 36 to 33 to 38. You can play with it a little bit. The point is, the range is larger between one share size and the next when the stop is bigger. When it's 70, we're talking about 70 cents, 80 cents, dollar, $1.25, $1.50. Versus in the beginning, every penny matters because the difference. So you can't go 5 cents, 10 cents, 15 cents. You're not going to have good accurate share size. Okay, you have to go initially every penny matters. Okay, could you discuss different time frame alignment? I still have a lot of questions about this. I could, but it's a big topic. And I did do a video to explain it in detail with symbols. So you might just want to watch that video. It would be better for you, honestly, because right now I'd have to have symbols to show you the different time frame, how they line up. So let me look up the video for you. And it's a long video that talks about multiple time frame alignment. Okay, so let me see if I can find it. Okay, here it is. It's an 19-minute video. It's a 19-minute video. All right, watch it. If you have further questions, come back next week or into tomorrow in the black room, and I'd be happy to talk to you about it some more. Okay, yes, I just posted the link. Yeah, you got it? You see it? Just posted it. Are bad day trading environments predictable? Yes. I mean, they usually are. I'll tell you when they are. Okay? I'll tell you what months or what periods. Mid-December to mid-January. Terrible. Usually terrible for day trading. This time around, maybe it was okay mid-December because the market was moving so much. Mid-June, in fact, the entire month of June is usually not very good. Let me do this first. Let me give you the worst months, and I'll type them in. In my opinion, the worst months to trade: March, okay, June, September, and December. Now, let me be more specific and give you the worst periods to trade: mid-December through mid-January. March, really, the entire month is bad, but mid-March through mid-April, mid-June through mid-July. Really, it's more like the entire month of June through mid-July, the entire month of December through mid-January, the entire month of March through mid-April. But I'm trying to give you the worst part of that period so that it's not a month and a half. And then mid-September through mid-October. Okay? Those, in my opinion, are the worst periods. You can go the entire month of September through mid-October. Okay? Those are the worst times to trade. Notice we are in one right now, mid-December through mid-January. And, December was a month that saw a lot of volatility. So at the beginning of January here, we're not seeing, well, we're seeing some volatility. I shouldn't say that, but I'm just saying the market is like the ocean, goes in an ebb and a flow. So or maybe that's not a good analogy. So we've seen the big move. Now it's the consolidation, maybe the big move, then the pullback or the consolidation, the big move. So it's not usually the best time to trade after. So it's not the best environment usually after that getting that high volatility. But the more accurate thing would be to say that it's the time of the year right now. It's not a very good time at all. I mean, I probably wouldn't trade beyond the first hour of the day if I was on my own, you know. But I'm in the room. I have to be in the room. So that's the one disadvantage to my job, is it does as much freedom as it gives me by working from home, being my own boss. Um, it does limits. It does. I have to be in front of my screen every day, almost. Okay. So there is definitely a disadvantage, um, but it has also its pluses. It has a lot of pluses, advantages. Okay, guys, I think that was a good discussion, a good session we had today. I hope you enjoyed it. I hope I was able to answer your questions thoroughly. And I will see some of you tomorrow in the room. The rest of you, maybe I'll see you next week. Regardless, in either way, I hope you have a great evening and a great rest of the week. Take care, everybody, and talk to you soon. Thanks so much, guys. Thanks, Chase.